Exercise 2-16 is a great review of the four financial statements and the way they relate to each other. First of all, they give us some balance sheet accounts as of the end of October and as of the end of November, but they're in a jumbled order. So let's create the balance sheet as of the end of October. Notes payable is a liability account, that's money that we owe. Land is an asset, it's something that we own. Capital stock is one of our equity accounts, as is retained earnings. And cash is an asset, it's something that we own. So let's put our assets together on the left-hand side of the balance sheet. That would be cash and land in this example for a total of 550. So if the left-hand side of our balance sheet is 550, the right-hand side has to be 550. Well, we know that we have the liability account, notes payable. We also know that we have the equity account called capital stock. So if we have a total of 550 on the right-hand side, and so far we've accounted for 275, 550 minus 275 means that our retained earnings at the end of October have to be 275,000. Let's do the same thing as the end of November. We have exactly the same assets, little different values now. Cash is up to 175, land is up to 575, so now our total assets are 750. If the left-hand side of the balance sheet is 750, the right-hand side has to be 750. We look at our notes payable, that has a balance of 250. We look at our capital stock, that now has a balance of 90. So 750 minus 90 minus 250 tells us that our retained earnings must be 410,000 for this balance sheet to balance. Okay, so now we know how much our retained earnings are at the beginning of November and at the end of November. Remember our formula: retained earnings at the beginning plus net income minus dividends, and the book tells us that we paid $12,000 in dividends, must give us retained earnings at the end. So however much money we made in net income, when we add that to the $275,000 and we subtract the $12,000 of dividends, we should end up with $410,000. So a little bit of algebra and you come up with $147,000 worth of net income. So part A was to prepare the balance sheets, part B was to determine the net income. Now let's go over here in the cash flow statement, if you will, and see if we can't come up with our cash flows from our various activities. Well, operating activities, our net income was $147,000. There's no accounts receivable or accounts payable or inventory in this problem, so it looks like our cash from our operating activities is exactly equal to our net income. Investing activities, well, what did we invest in? We bought the land. It went from $550,000 to $575,000. So that means we spent $75,000. I'll put that in parentheses to remind me that that's a negative number. What about financing activities? Well, a lot of stuff happened as far as financing activities go. First of all, we sold some stock. We went from $75,000 to $90,000. So that means we must have gotten in $15,000. Another thing that happened as far as investing goes is we paid dividends of $12,000. So that's money out. I'm going to put that in parentheses to remind me that that's dollars out. And the last thing that happened as far as financing activities go is that we borrowed some money. See what happened to notes payable? Went from 200 to 250. So that means we got 50,000 bucks in. So if we total all those changes up, we get a change in cash during the month of November of $125,000. We started with 50. We added 125 from these three different categories of activities, and we ended up with $175,000. So the net increase in cash is this $125,000. Here's the trick about cash flow statements. You always know what the answer is. You always know that your cash, in this example, for example, went from $50,000 to $175,000. So you know that the change in cash is a positive $125,000. So when you're trying to complete a statement of cash flows, you know that you want to end up with a change of $125,000, resulting in cash at the end of $175,000. All right, you can watch this thing over and over again, assuming you can endure it over and over again, and hopefully that'll help you understand how these various financial statements relate to each other.